Hey everybody, Economic Ninja here. I thank you so much for being here. We're going to talk about crypto taxes, the one thing that nobody wants to talk about around the public, but everybody wants to know everything they can about it. So without further ado, I am here with Tom Wheelright. Tom wrote this book. This is the first book I ever read after Rich Dad Poor Dad, Tax-Free Wealth. And it literally changed the way I look at taxes. Well, now we got lots of questions about cryptocurrency taxes. So without further ado, welcome, Tom. Thank you so much for being here.
Thanks so much for having me. It's great to be with you.
Awesome. So first thing I want to do is I want to thank you for pointing out a very serious fact, something that happened in the beginning of the year, something that changed on some IRS tax forms. And that was a box that was, you couldn't get more blatant. We're going to put this box at the top on the front, and it says something very special. It says, check this box if you have ever invested, purchased, sold, practically thought of cryptocurrencies. And you were warning people about how important it was to check that box if they had indeed what it said it did. Can you go over that and its implications?
Yeah, so obviously the government is concerned about the underground market in cryptocurrency, and the government likes to control everything, particularly the IRS. And so they put this question on the form, and the reason, and by the way, if you answer that incorrectly, if you lie about it, that is a felony.
Yes.
You're not getting a slap on the wrist. You're going to prison for that.
Yeah.
So the government is very dead serious about understanding who has cryptocurrency. They're putting it in their database. They want to understand what's going on. They've said actually that they're really talking about people who trade or, cryptocurrency, not just who own it, but that's not the way the question reads. So if you own cryptocurrency, I highly suggest that you actually mark that box yes, even if you haven't traded any, because, what do you really have to lose? I mean, the reality is the government is got their eyes on you. Big brother is watching. Yep. And just understand that, it doesn't mean you're going to pay a lot more taxes. It just means that they're going to know what you're doing.
Exactly. So I really appreciate that, because people need to understand how serious this is. Anytime you falsify a government document, it's a felony. And that's what Tom is referring to. And this is going to roll into the second question, because when I started covering this topic, people started really freaking out. And they said, but if I check that box, does that mean I'm going to get taxed this year? And the next question is, the next question is about trading crypto, but technically we'll just ask this question. Does just checking that box qualify as a taxable event?
No, of course not. You have to have some kind of a transaction to realize some kind of gain in order to be taxed.
Perfect. So that leads us into the second question. People ask me all the time, when I trade crypto for crypto, is that a taxable event? And I'll give you an example. A lot of people use Coinbase and Gemini in America, Binance in other parts of the world. When you, let's say, own some Bitcoin and you decide today, Bitcoin's up and Ethereum's down, maybe I'll trade them real quick. Does that trigger a taxable event?
Absolutely. What most people don't realize is that the tax law says anytime you have a sale or exchange of property, you have a tax consequence to that sale or exchange. So you may think, oh, I'm just exchanging. Yeah. But an exchange is taxable. So that means that you've actually got a gain or loss on, basically the sale of your Bitcoin. And then you have a new basis, a new cost equal to whatever that price was of the Ethereum.
Now, here's the point where everybody leans over their chair because they're hoping I'm going to ask this question. And this is a little off topic. Well, it's on this topic. How do you record? We'll use the Bitcoin is high, Ethereum was low that day example. How does someone record that transaction? Because these are transactions made in Satoshis and bits of Ether. So how do you record that?
Yeah, you're going to record it at its dollar value at the point of trade. So, when you exchange, Ethereum's not priced in terms of Bitcoin, right? Ethereum's priced in dollars. Bitcoin is priced in dollars. So it's really easy to mark down, okay, I sold Bitcoin, I sold one Bitcoin, it was $44,036, and I bought, 20 Ethereum, and, they were 2,200 or whatever. And so that you've got that actual record, but you do need to keep track, because when it comes tax time, this is something we discovered years and years ago when people started doing day trading. I remember back in the early 2000s. I had a client that started day trading, and this was before the investment companies like Charles Schwab actually tracked it for you. And you had to do your own tracking. It would take us hours and hours and hours preparing those tax returns because we had to have all that documentation and show when did we buy, when did we sell, and we had to trace it and all that kind of stuff. So I think this is practically speaking, the biggest challenge with cryptocurrency is actually keeping track of it and keeping track of your buys and sells.
So I'm laughing because I was one of those people in the early 2000s, and it was horrible because not only, you know, it was frustrating for me, but I had to pay my accountant the time to make sure I'd done my job right. So it's going to cost you time and money. So what we're talking about is capturing a cost basis, and like Tom says, it's very important to just get a little organized. You know, write down the date, write down all kinds of, as much information as you can, like he says, and you'll be prepared for your taxes. Now, a lot of people are using trading bots right now, and that's going to be very interesting. I don't even want to get into that, but I know there's a lot of people right now that are going, what do you mean? Let's just leave that one alone. How's that? When you're using a crypto debit card that uses crypto to convert to fiat for purchasing anytime, and I want to make this very clear to everybody, there's two different ways. Some cards allow you to deposit, let's say, $10,000 worth of Bitcoin onto your account, and then at a certain point, you immediately convert it to dollars, and you have 10,000 fiat dollars on your credit card you could spend anywhere. So we know that would be a taxable event. But some cards are very interesting. They allow you to keep the Bitcoin on your credit card, and then at any moment, let's say Bitcoin shoots up to 60,000 bucks, and you're at Neiman Marcus and want an awesome pair of shoes, and you scan that card, and then what it does is it pulls from your Bitcoin balance when it's higher, and then puts it into the fiat system. Is that a taxable event?
Yeah, anytime you're using Bitcoin, it's a taxable event. So the way to think of Bitcoin, think of it as property. It's a little bit like if you used Apple stock to buy things. Okay, it's kind of the same idea. It's not technically stock, but it's a little like if you did that, it's actually a barter. Okay, so you know, gold would be the same thing, right? If you used actual gold to buy something, you would have a gain or a loss when you use that gold. Well, the same is true for Bitcoin, Ethereum, or any other crypto. Every time you use it, you have a taxable event.
Yep. And really, how people spend their cryptocurrency is not our position, right? We're wanting to show you the way the laws have been written, the tax code is set up, right? Because we want people to be prepared for success, not failure. So a lot of people are smacking their head going, how could I even do this? And I think it's very important because some of these third-party applications, like I was talking about the credit cards, they're not necessarily keeping track of your transactions. So that can get very, very, very scary around tax time. So I want to make sure people know that. And then, Tom, would you mind explaining the first in, first out rule when it comes to trading crypto, using crypto as an example, but really when we're talking about capital gains, how it works?
You really have a choice of which Bitcoin you're using. I mean, remember, Bitcoin's fungible, right? So it's like cash, it's fungible. How do you know which one you used? And so you basically make an election on your tax return, and you just have to stick with it. So you can use an average, okay, of the cost of your Bitcoin. You can use, you know, the first one you bought, you know, is the first one you sell. That's first in, first out. First one you bought is the first one you sold. You can specifically identify. So you say, look, I'm using this Bitcoin that I bought on July 11th of 2020. That's the Bitcoin I'm using here. Okay, right. So you've got some choices, and this is where sitting down with a tax preparer who actually understands cryptocurrency would be beneficial to you, and preferably somebody who actually owns cryptocurrency, I think, so that they understand where you're coming from, because guess what? Every one of those transactions is just going to be a challenge to keep track of.
See, that's absolutely huge as far as tax planning, because I'm used to first in, first out with stock transactions. The way that I do my stocks. I know I'm sure there's people way more successful than me that can manipulate the way they did that. But that's a really neat deal, because you can, if you have a proper tax person, like you said, that understands crypto, you can choose to sell a Bitcoin that might not have as much profit because of when you sold it and when you sold it, as opposed to something you bought a long time ago.
Right. I mean, you do the same thing with stock, right? You can specifically identify the stock.
Yep.
We've always done that with people who have like a lot of stock options. Let's say you have, you work for Intel or Microsoft and you have a bunch of stock options. Well, we want to specifically identify which ones we sell because we want long-term gain, not
Yes.
short-term gain.
Yes.
We don't want to sell the most recent Bitcoin we bought. But second of all, we also want the highest basis, meaning the lowest net gain.
Wow, I love that explanation. You're literally blowing my mind because I'm just used to buying normal stocks on, like, let's say my institutional TD Ameritrade account, things like that. So I have never myself done what you said and have somebody designate. It's always been first in, first out. So technically I've lost money because I've paid short-term capital gains where sometimes I could have paid a little different. So let's do this. This is an extra question, a little bonus question. There are some changes being proposed right now by the government that are going to affect, that could affect capital gains. Are you familiar with these and might be able to add some information to it?
Sadly, I'm very familiar. They actually released a green book, which is an explanation, which I have read multiple times now. So yes, sadly, I'm very aware of them.
So what's the difference being proposed about the capital gains tax and how could it affect cryptocurrency investors and all investors?
Well, they're suggesting that if you have a minimum amount of income, and they're suggesting $1 million, that anything over that, if you have capital gains, long-term capital gains would be taxed at ordinary income rates. And so that means that instead of being taxed at anywhere from 0 to 20%, which is the current tax rate, you could be taxed as high as, they're looking at a 40% tax rate. So it's a major change. On top of that, they're talking about taxing gains at death. They're talking about taxing gains when you gift that money, or when you make that. Let's say you gave your child some Bitcoin for their birthday. That would be a taxable event.
Yeah.
Okay.
Yeah.
So they're talking about if you put the Bitcoin into a partnership, they're talking about that being a taxable event. So they're really upending historical tax law completely with their proposals, and we'll see whether they happen. But at the same time, that is the proposal. And by the way, the capital gains tax increase, should it happen, is retroactive to April of this year. So it's not like you can plan for it.
And I mean, honestly, and I got to say, come on, man, who's coming up with these stupid ideas? And I mean it stupid because think about what Tom just said, people. The wealthy, we're talking about people with income over $1 million. So it's not going to affect the masses right now. But just, that's how taxes started. It was always for the rich. Exactly. And they kept true to that. There's still a 0% tax bracket. But my point being is that what is going to happen when a lot of people with a lot of wealth, and right now we're talking about cryptos. There's a lot of wealthy people with a lot of crypto are just now told, if it goes through, what's going to happen the day after they say, we've doubled your taxes? Well, Tom, if they sell this year, would they be able to skirt that?
Probably not. Like I said, I mean, it goes back to April. So
okay,
they probably can't. And here's something that I hear a lot. Well, the Republicans will get back in office and they'll reverse this. Well, it's actually pretty easy to reverse the tax increase. What's not easy to do is to pay for that reversal. So in other words, what's happening is there's the government is proposing, along with this tax increase, they're proposing increased entitlement programs, preschool, child tax credit, even community college. And once you get an entitlement in, the Democrats are being very smart about this. Yeah. Once you get entitlement in, you can never take it away, right? Once you give somebody something, you can never take it back. Yeah. And so what they're planning on is, yeah, we get that you could undo the tax side of this, but you're still going to have to pay for those entitlements, or you're going to have to tell people, guess what? You don't get that check every month anymore.
Ooh. And so we know the outcome of that. And it's really interesting what you say, that it's retroactive back to April. So this may not cause a selling panic if it goes through like that. What it could do, I want people to think about this, is cause more people to rush into crypto. And I'm going to bring up something with Tom. He doesn't know I'm going to do this. One of the things that Mr. Wheelright loves to talk about is one of the great aspects of real estate is that you get tax-free wealth because you're able to borrow against the asset tax-free. A lot of people don't understand how to use your cryptocurrency, keep it, and borrow against it. So in that instance, because there's lots of companies doing it, Mr. Wheelright, would you consider that a good avenue for some people? If these high taxes come into play, people will still be able to hold on to their crypto and borrow against the value of it, tax-free.
Yeah, of course. The challenge with crypto is that it goes up and down. So
Yep.
you're not going to get the same loan to value that you would with real estate or if you had a CD, right? Yep. But it's the same idea as if you had, let's say you had a CD in the bank and you want a line of credit, and they say, well, we're going to use your CD as collateral. Or you've got a whole life policy and you've got cash surrender value, and the life insurance company says, look, we're going to use your cash surrender value as collateral for the loan. If I were doing a crypto credit card, that's the way I would do it. Okay. I would actually set it up as a loan, and I would just do I would make the transaction once a month so that you actually just took from the crypto and converted once a month instead of every transaction. I think these credit cards that are converting every single transaction, I think they're going to have an outcry once their users get their bill from their accountant next year. Yes. In doing their tax returns, and they're going to say, look, wait a minute, can't you just do this once a month? Yep. On the 31st of the month or something? But then what you have is you have a massive sell-off on the last day of the month, right? And yep. So that affects the volatility of the market as well. So it's a really interesting situation that you have. But just remember, it's you do have that option. If you have that option to borrow, borrowing is not a taxable event because you owe the money back.
Awesome. I can't hope that people can appreciate this information here, because these are things that we're talking about in the crypto world that nobody's really talking about right now. And like Tom said, people are going to have a rude awakening in the future. See, because these are issues right now, but with taxes, because very few people plan, they don't see the problem that's already too late to do with, anything about it until the future. So with that being said, Tom, is there anything that you have as far as tools in your toolbox your company offers, and this isn't a referral or anything like that, that could help people?
Yeah, for sure. We've developed an entire system for reducing taxes. There's the tax laws, not any different from the weather. There are patterns here that you follow, and if you follow them, they will always produce the same result. Doesn't matter who you are. As long as you do what we tell you to do, you're going to reduce your taxes. We like to say that if you want to change your tax, you need to change your facts. Well, I can't change your facts for you. You have to change your facts. But what I can do is I can walk you through and say, okay, change this fact, change this, change this. Here are your options. Now what happens is once we get that kind of education, now we have choices. And I've always thought the most important thing we can ever have in life is a choice.
Yes.
We can choose to pay tax or choose not to pay tax. We can choose, for example, do we have a credit card, a crypto credit card that takes the money out every single time we use it, or do we get one that takes it out once a month or on the front? I mean, it could take it on the front or the back. Who cares? I mean, it's because the volatility, I'm not sure that you can time that anyway. So I think that what's important is that, we also provide the education. So, we can actually show you the pattern. Do this, do this, do this. You just go to wealthability.com. We'll also provide an advisor if you want one. We have 50 member CPA firms around the US and Canada. And so we're happy to provide somebody who really understands what your situation is and is going to be the right fit for you.
That is absolutely awesome. Thank you so much, Tom. Everyone, I'm going to put a link to the Wealthability website in the description below. I thank you so much. Tom, do you have anything else to say before we take off?
I want to reemphasize that you have a choice. Okay, get educated. What you're doing here on the Economic Ninja is vital, because you're providing people with a choice. Once we get educated, we have a choice. When we're ignorant, we have no choice. And you can choose to pay taxes and pay high taxes, and you can choose to ignore it, but you're choosing. Okay. Right. So getting that financial education that you're providing, getting the financial education that Wealthability provides, what we're doing is we're giving you a choice, and then you can decide what you want your results to be.
I love that. Thank you. And really, we want you, the listener, to have more money in your pocket at the end of the year to build your family, to build your community, and to build our country. We need more wealthy people, not poor people in this country, so that this country can continue to grow and thrive. All right, guys, with that being said, I thank you so much, Tom. The Economic Ninja is out.